Okay, so thank you everybody for being here. We are here with Coty de Monteverde, Crypto and Blockchain Center of Excellence at Santander, Francisco Maroto, Head of Blockchain and Digital Assets at BBVA, and María Ñiguez, IT lawyer at EJASO. Thank you for being here. We have two bankers and a lawyer. This is going to be a party. Okay, so when somebody told me that we were talking here about mica, I thought, oh, cool, minerals. I love minerals. But no, we're not talking about minerals. And then somebody told me, okay, we are talking about Dora, Dora the Explorer. I love Dora the Explorer with that blue monkey, the crazy monkey. But no, we are not talking about Dora the Explorer. So we are talking about regulation. Regulation. Who in the European Union is setting names for regulations like mica and Dora? I think they're having a lot of fun setting regulator names. So, okay, let's talk about regulation. So, Frank, what is happening in crypto right now? Is this a good time for regulation in crypto?
Well, it's a pleasure to be here with all of you today, again in the European Blockchain Convention with lots of connections and learning about new projects and activities from all the players in the ecosystem. What is going on? I think we all know what is going on. We're in the middle, at least. I don't know if it's in the middle towards the end, I hope so, or towards the start of a big, deep and cold crypto winter. We have gone through many crypto winters in the past. This is nothing new, and we have survived all of them, so we hope that this is the case and we can continue moving forward with this great technology and the use cases that we need to build on top of it. But yeah, we are in the deepest one, at least in the history of this new market, an emerging market. And why we are suffering so much? Well, because in this last bull market, we saw how institutional money started to pour or to get involved in the crypto markets. And this was something great because it brings liquidity, and liquidity is needed to make the markets more mature and more stable. But, well, we have seen how this institutional money that entered in 2021 has flown away with the problems and the uncertainties that we have seen during these last months. And we are now in the levels of 2017, more or less, around capitalization and price of the cryptocurrencies. And that's in 2017, we saw another bull market, mainly driven by retail, not by institutional money. And that's why that crypto winter was a bit less deep and intense. No? So what do we need to do to attract, again, institutional money into the space? Well, institutional money likes certainty, they like stability, and something that brings these characteristics into this new market would be regulation. So yes, I think regulation is needed. Is needed to attract, again, institutional money back into the market, and it's needed to protect customers. We are seeing how retail customers are suffering with these problems and bankruptcies and getting stuck in all the bankruptcies that we are seeing and frauds that we're seeing in the industry. So regulation is needed for both institutional money to go back to the ecosystem and retail to be protecting. What are we seeing in the world around crypto regulation? Well, we are seeing it that it's coming at different speeds. So we see some countries that are moving first, such as Singapore or Switzerland, and they have already regulation in place that is allowing institutional projects or money to step into the space. We are seeing others that are following, like the European Union with MiCA and the pilot regime and other regulations that will impact blockchain space, as we will discuss during the panel today. And we are seeing other countries which are still waiting, and they might wait until they have clear regulation maybe coming from the European Union or from the US and copying that regulation. I mean, the Europeans are very good at innovating in regulation and then exporting it to the rest of the world. Let's try and this is good, but this will be better to innovate also in technology and business and new business models. No? So yeah, we have seen different speeds, and we are also seeing different directions. So we are seeing some countries like China regulating in negative, so they are forbidding the use of crypto. And we are seeing other countries, such as the European Union with MiCA or the United States, that want to bring regulation into the market, but allowing the market to move forward or to keep going. No? In the US, administration Biden has instructed that the supervisors of the country and regulators of the country start moving forward, but they haven't done so yet. In the European Union, we are moving, and we are just about to have MiCA in place, no? In April, let's hope. No? So regulation is coming, and let's hope it helps prevent these crypto winters that we have suffered. And maybe if we had regulation in place, we could have avoided these problems of bankruptcy and fraud, because there would be many more control mechanisms in place. And the players in the space would have to implement control and risk management solutions, and the bad players might be not allowed to operate in the market. So, yeah, in general, I think regulation will be good. It will attract liquidity, and it will help this new market, this emerging market, mature and come closer to the standards of the traditional financial markets. I don't know, Coty, if you have another view or...
I totally agree with you. All of you know that innovation always is faster than regulation, but some countries are doing it better than others as well. And I have to say that this regulation should be clear and harmonized, because if not, we see things like what is happening in the US last week with Kraken having a fine because things are not clear. Then we've got the VASS, the Binance USD stablecoin, which suddenly it's a security, but in MiCA, stablecoins are like e-money. So having also a harmonized regulation helps, and being super, super clear that it's something that I see that there's a lack of.
Okay, so we have a lot of regulations: MiCA, DORA, MiFIR, MiFID II. Maria, what's the application field for each one of them?
Good afternoon.
Make us understand.
No? Thank you. Thank you. Well, what all these NICs name have in relation with MiCA, no? Well, let's try to get straight to the point. When the crypto asset is a financial or a security or a financial instrument, then the regulation or market for financial instrument are applied. For instance, MiFID and MiFID II. But when the crypto asset is not under the definition of financial instrument or security, then is when MiCA will appear on a stage. And MiCA tried to establish or define the uniform and this need a uniform regulation for those who wants to offer crypto assets in the market, as well as for those who wants to provide any type or a specific crypto service providers. For instance, exchanges and crypto and custodial wallets. All in all, I think that MiCA will help, or what it's going to introduce in the market is a package of rules that will try to protect consumer, give legal certainty for institutions who wants to start working in or be providing this type of services, and also to reduce and to avoid the market manipulation and financial crime. And finally, let's explore DORA. done. What DORA introduced also is a package of rules in order to guarantee or to improve the operational resilience of financial entities, specifically regarding the network systems and ICT system. And maybe we can ask and why we have to apply DORA if we are talking about crypto. So here is the answer. Here is where I find the clue is that because crypto service provider as well as those who wants to provide a crypto service have to comply with the set of obligations introduced by DORA.
Okay,
good. So, Maria, I don't know if Fran, you have something to say about that?
Yes, I would like to comment. I mean, hearing to what Maria was saying, lots of regulations coming to the crypto market space. Those that we have been in financial markets for a while, we know that after 2008 crisis, financial crisis, the financial industry suffered a regulatory tsunami. No? Lots of new regulations came into place, and we struggled to adapt and to invest a lot of money to be able to comply with all this regulatory tsunami in order to make the financial markets more stable and more better for the users. So now we are seeing the same thing in the crypto markets. We are seeing how after a big a big crypto crisis or crypto winter, a regulatory tsunami is coming. In Europe has started. In the US, it will come in the following months. So now the crypto industry, as widely, needs to adapt and start investing and preparing for this regulatory tsunami. And it will be difficult. I mean, it won't be easy to adapt and to be able to comply with all this regulation that is coming.
Will that tsunami clean all the companies, the projects that do not bring security to customers and to companies?
Well, I don't know. That depends more on the capital they have to be able to invest. So they might be very good projects and companies that are good and that they will be swiped with the tsunami because they won't be able to access to more investment in order to be able to adapt and comply. There will be bad actors that have a lot of capital and will be able to resist and continue living. Then it's a matter that the supervisors are ready, prepared, have the knowledge and the resources to be able to monitor the market, identify these bad actors and remove them from the ecosystem or don't give them license to operate. So it might be.
The market will reach a balance.
Let's hope.
Okay. So, Maria, in the finance sector and talking about regulations, what are the milestones and requirements for the coming years, for the coming months?
Well, if we focus on MiCA regulation, I think we can see two sides on MiCA regulation. The first, regarding the issuing or putting in play on the market crypto assets, and I think in this way, I think we can explain this as MiCA defined for those issuers, those who wants to offer to the public crypto assets, like a kind of traffic light compliance regime. For instance, red, highest risk EMTs, e-money tokens. So those who wants to offer or introduce into the market e-money tokens, they have the strictest regime. For instance, those of very specific entities are going to be able to introduce this type of offer, this type of crypto assets. Second will be orange, and it will be the asset references token. It also have a strict regime to offer this type of this kind of RTs. For instance, it is necessary to provide or to comply with an authorization regime, as well as, for instance, to have the white paper has to receive the approval of the or supervisor authority. And finally, but not least, the green, the lowest risk, which is all those crypto assets that are different from RTs or EMTs, that have a kind of softer compliance regime. For instance, they have to comply with a specific substantive white paper, whereas they don't have or they don't need the approval of the supervisor. And the other hand or the other side of MiCA is crypto service provider, including exchanges or custodial wallets. And in this case, there is also a regime, a compliance regime to follow, and maybe we can structure it as 3 blocks of obligation. The first one, to be able to offer this type of crypto services, it's necessary to have what we call the MiCA license, a specific license, unless you have a specific previous license, for example, as an entity, as a banking entity, for instance. In this case, it will be only necessary to communicate to the supervisor that you have the intention to start providing this type of crypto services. Second block of obligation, and it's like a common for all those crypto service providers have to comply with. For instance, they have to act with honorable, very with transparency, and always in interest of the customers. Second, they have to have and comply with a specific governance regime. And finally, and not last, it depends on the type of the crypto service provided. Then, in these cases, there will be an extra obligation. Let's make an example. Let's introduce an example. If you are a custodial wallet, you have to, of course, comply with the authorization obligation. Of course, you have to act honestly, and you have in interest with your client, but also you have a specific obligation. For instance, you have to have a custody policy, and also you have to have the crypto assets of your clients in a different account, in a very differentiated from your own crypto, for your own crypto assets. So, all in all, I think that all these measures introduce legal certainty, protect definitely the customer. I'm very focused on how to protect the customer and be transparent with the customer, and also try to professionalize in a way the crypto sector, and at the same time give certainty for those crypto for institutions that want to start providing crypto services.
I'm sure somebody in the audience is thinking right now, oh shit. Okay, so Coty, how will affect MiCA to next developments in the finance sector? Is it enough? Is MiCA enough for this?
Well, it's good enough, let's say. MiCA is going to have a huge impact in the financial sector, also in the crypto asset service providers. For us, in our case, as Maria said, we will need a license that we already have, so that obviously it's an advantage, because MiCA is trying to regulate crypto assets similar to financial assets. In fact, there are some assets that are tokenized financial traditional instruments, and they are going to be regulated with the current regulation that we have for those with MiFID. That means that a tokenized bond is a bond, and tokenized shares are shares, right? It doesn't, it doesn't mind what the technology underlying is there, right? So
you are already covered by regulation.
That's it. So right now, financial institutions will need to start thinking what opportunities they are going to have and how the landscape is going to change with MiCA. Obviously, there's challenges because we are going, the financial sector, to be exposed to new risks that we currently don't have, right? But we can see, for example, in Switzerland, that it's a super crypto-friendly country. They already have regulation in place since 2021, And the financial sector is offering crypto services. I mean, you can tell us, right? This is a good example, BBVA. So with MiCA in place, that gives confidence to the financial sector to start offering crypto products as well. Also, it opens the collaboration with the crypto asset service providers, because MiCA also will ask crypto asset service providers to appoint a custodian for the assets of their customers. And those assets are not only crypto assets that they can custody, but also there's cash and there's financial instruments. And for that, they will have to collaborate with investment firms that can custody financial instruments and with banks that can custody the financial instruments and the cash. So collaboration is open there. But the huge impact is going to be for crypto asset service providers, because they are going to be regulated similar as banks are, and it's tough. I mean, you need to have all the risk management procedures. You have to ensure that you have certain levels of capital, or get an insurance. Getting an insurance for crypto assets, it's not easy, as some of you know, right? They have to also comply with anti-money laundering procedures. They have to have business continuity plans, blah, blah, blah. I mean, that's a lot of work. Some countries in Europe have already kind of regulation, licenses, like in France and Germany, and there's providers that already have that type of license, but they should start working on how to adapt to MiCA, because the gap between that legislation and MiCA could be wide. So I think that the impact is going to be very, very big there. You were saying if there's going to be a tsunami, probably because there's a lot of effort for getting that license. And regarding MiCA also, it's worth mentioning the timeline. The final text of MiCA was going to be approved by the Parliament, ratified in December. It was postponed to February, and now it has been postponed to April, because that text has to be translated in more than 20 languages, and it's very, very complex. So after it's ratified and it's published in the official journal of the EU, then there will be like 12 months to put into force for stable coins, and 18 for the rest. So I would say that in maybe less than 2 years. 2 years. Yep, you will need the license, right?
You have time.
And
start working on it.
The last thing, if it's enough, MiCA, I think they were hurrying a little bit to get the final text, because all the all the crises that we are seeing with crypto. So it's not covering NFTs, it's not covering DeFi, lending, staking, DAOs.
What will happen with DeFi?
So they did a great effort with MiCA, and I see that the UK, that it's opening the consultation right now for regulation of crypto assets, is going to get inspired by MiCA and introduce improvements. So that's also great.
So we will get something from UK probably.
Then we'll get MiCA 2 inspired by the UK.
We'll
there's like an iteration.
MiCA 2. Okay.
And hopefully we inspire the US as well.
Yeah, I mean, Christine Lagarde was saying just a few weeks ago that we need MiCA 2. So we have not signed MiCA 1, and we are thinking in MiCA 2, so it will come. It's needed. I mean, MiCA 1 is a good first step for the basic services, issuance and service providing, but as Coty was saying, many more things to cover.
Absolutely. So Coty, what other regulations will affect your projects?
I would say that there's 3 more regulations apart from MiCA. There's the so-called travel rule that already applies for the financial industry, but the global anti-money laundering watchdog, the FATF, has expanded it to crypto asset service providers. So that means that in each crypto transaction between crypto asset service providers, they have to identify the source, I mean the origin of the transaction, and the destination. identify with personal information to make sure that they are not involved in any suspicious things, sanctions, etc. I think that's another big effort. And it will cover any transaction, without limits. In case of transfers that are coming from or going to unhosted wallets, that means cold wallets, for example, MetaMask, etc. The receiver or the sender has to prove that it's his own wallet for an amount above 1,000 euros. That's going to provide, a lot of security also for financial institutions that are working with crypto asset service providers, ensuring that they comply with anti-money laundering regulation. That's one, the travel rule. Then for banks, we've got the prudential treatment of crypto assets. Prudential treatment of assets means that you have to have some standards on how to classify, value, and manage assets. We already have that for traditional assets, but it was needed also for crypto assets as well. So we can ensure financial stability, we can set the appropriate levels of capital so we can absorb potential losses. And thankfully, after some reviews, I think that the text is reasonable because it's applying same risks, same rules. So that means that for crypto assets that are, for example, tokenized financial instruments, they are applying the same rules as the financial instrument itself. It has also a stable coin with a stabilization mechanism as well. It's the same rules as before. They are not penalizing the banks. But in case of backed crypto assets or those ones that don't have that stabilization mechanism.
Do you think this will affect to stabilization on Bitcoin, Ethereum pricing?
No, this is just on how banks we have to ensure that we have the required level of capital to protect our investors, right? So if there's a loss, that we have that capital needed to absorb it. And that's something that we already do with traditional assets, but we didn't know how to manage the crypto one. So we already have this standard or these rules that has set by the Basel Committee. With the more risky assets, there's a more conservative approach, and we have some exposure limits. We cannot have all the crypto assets that we would like to. There's I think it's set at 1% of tier 1 capital. So, some restrictions, but it's a regulation that was needed. And the last one, because I know that we are running out of time, is the pilot regime, which is kind of a European sandbox where financial market infrastructures.
Just announced.
Yes, in fact,
couple of days ago.
In March 23, applications will be open. It's going to last for 6 years, and financial market infrastructures have a safe environment to test DLT applications, more focused on those companies that are doing trading, settlement systems, multilateral trading. So I think that will help to move towards a secondary market for tokenized financial assets. And those are mainly the other 3 regulations. I don't know if, Fran, you want to add something else?
No, I think those are the most relevant, at least from a bank's perspective. The pilot regime also enables the use of tokenization of traditional financial assets, which is something that was needed in order to move forward. And yeah, the capital requirements, which has a strong impact because it penalizes a lot the banks that has crypto proprietary position, and that's a problem if we want to build a trading desk or compete with exchanges. And it also impacts the way we invest in venture capital, because the investments in crypto companies will also have this penalization in capital, and that's a challenge for us because they will need to be much more profitable in order for us to be able to invest in them. These are ways to protect the financial industry from crisis in the crypto market, crypto ecosystem. I think they have started maybe too strict. We'll see if in the future we are able to make it more flexible as the market moves towards being more mature, more secure, more
The market
stable.
will regularize itself. Okay, so we have only 1 minute. So in 2 sentences, could regulation be a game changer in crypto? Closing the loop in the panel name. Coty?
I don't know if it's going
2
to be
sentences.
a great impact, but it's a positive impact for sure, because it's going to provide more confidence in the whole system.
Yeah, I want to emphasize what I mentioned at the beginning. Healthy markets needs liquidity and protection and security. And this is mainly brought by 2 factors, institutional money and regulation. So yes, it's needed.
Maria?
From my point of view, yes, because regulation is going to help to the crypto industry.
Of course, you're a lawyer.
I'm a lawyer, definitely. So, of course,
I'm going to help you.
And because I think regulation is a lever to help to introduce in the market as legal certainty, protection to the consumer, and also to professionalize the sector.
Okay, so thank you for being here. Thank you, everybody, for attending, for listening to us, and see you in the market.
Thank you.
Thank you.